All right, let's jump right in. The Okanagan's housing market for the third quarter of 2025 is sending some seriously mixed signals. I mean, are we looking at a genuine rebound? Or is it all just a mirage? We're going to unpack it all. So, let's get right to the heart of it, the central puzzle everyone's trying to solve. You see, depending on how you slice these Q3 sales numbers, you can tell two completely different stories. One says the market's coming back strong, and the other? Well, it says we're still deep in a slump. So, which is it?
This is the big question on everyone's mind, right? Is the market hot or is it not? Let's look at the numbers that are causing all this confusion.
On one hand, you see a number like this and you think, wow, things are really heating up. Residential sales jumped nearly 19% in the third quarter compared to this time last year. I mean, on the surface, that looks like a fantastic, healthy rebound. But, and this is a huge but, you have to add some context. That rebound we just saw, it's coming off a historically bad year in 2024. So when you zoom out and look at the bigger picture, sales are still lagging a full 30% behind the 10-year average. That points to some real, persistent weakness in the market. So, what's really putting the brakes on a full-blown recovery? Well, a massive piece of the puzzle is in the super confusing world of interest rates. It's all about why the rate you hear about on the news might be totally different from the one the bank actually offers you. You see, all through 2025, the Bank of Canada has been doing its part. They've been cutting their main policy rate again and again. So, in theory, that should make borrowing money cheaper for everybody, right? Well, that's only half the story. And this is where it gets really interesting. We're seeing this huge gap open up between the two main types of mortgages. Variable rates, yep, they follow the Bank of Canada, so they're trending down. But fixed rates are a different beast. They listen to the bond market, and with all the economic uncertainty out there, they've actually been creeping up. This analogy just hits the nail on the head. It explains the situation perfectly. Even while the Bank of Canada is trying to lower the cost of borrowing, the lenders who give out fixed-rate mortgages are basically hedging their bets. They're pricing in risk for the next 5 years, and that's keeping those payments stubbornly high for a lot of buyers. Okay, but it's not just about interest rates. You have to look at what's happening right here on the ground, in the local Okanagan economy. And that means we need to talk about jobs and we need to talk about people. This number here is a big deal. As of September, the unemployment rate in Kelowna hit 7.1%. Now, not only is that up from earlier in the year, it's also higher than the average for the rest of the province. So what does that actually mean? It means people are getting nervous. With more uncertainty around jobs, especially in our key industries like tourism and construction, buyers just don't have the same purchasing power they used to. They're way more cautious and they're hunting for value. And it's not just the job market. For the first time in a while, we're seeing a major slowdown in the number of people moving here. After years of just explosive growth, things are changing. Federal policies, provincial trends, even the flow of people from Alberta has reversed. All of this means less demand, which is a total flip from what we saw just a couple of years ago. Okay, so this is where the story gets really, really interesting. Let's talk about housing supply. Because when you actually dig into the listings, you realize pretty quickly that we don't have one market right now. We have two. I mean, just look at this chart. It's incredibly revealing. Sure, the total number of homes for sale is down a little bit, but that one number hides this massive split. On one side, the supply of single-family homes is dropped way down, creating a shortage. And on the other, the condo market is being absolutely flooded with new listings, up over 32% from last year. So where are all these condos suddenly coming from? Well, it's not really a mystery. The province brought in new rules targeting short-term rentals, and that's caused a wave of investors to decide to sell. They're catching out, and that's dramatically cranking up the supply, but only in that one specific part of the market. Okay, so we have all these conflicting signals, all these moving parts. What in the world does this actually mean for you, if you're out there trying to buy or sell a home? Let's break down the playbook. If you're thinking about selling, you need to pay very close attention to this chart. The data could not be clearer. Time is not on your side. The longer your home sits on the market, the more negotiating power you lose. We're talking a significant slice of your asking price vanishing for every week it sits after that first month. So, for sellers, the playbook is simple. Pricing it right from day one isn't just a suggestion anymore, it's the entire strategy.
In this market, being realistic with your price and flexible on the terms is what's going to get your home sold, period.
Now, if you're a buyer, listen up, because this is a market of real opportunity. The tables have turned. First-time buyers are a bigger part of the market now than they've been in over a decade. With less competition breathing down your neck and way more choice, especially in the condo market, you have leverage. You have power that just didn't exist 2 years ago.
So, at the end of the day, the Okanagan market isn't a crash, but it's definitely not a boom either. What it is a complex, kind of messy moment of rebalancing. And inside that rebalancing, there are some unique challenges, for sure, but there are also some incredible opportunities for both buyers and sellers who know what they're looking at. The real question is, where will you find yours?